Welcome to Bunnex Investment Group. In this video, I am going to break down the exact steps that I take for me to catch entries like these ones. This is USD CHF before and after, anticipation of level 3, whilst it's playing out, completion of level 3, and we reach the peak formation high. CHF JPY before and after, Euro GBP before and after. You can see more of these screenshots on our Instagram profile, Bunnex Investment Group. I'll leave the link in the description box below. Alright, so I'm going to use Euro GBP for illustration. We are going to do all the steps right in front of you so that you can as well replicate in your own trading. So trading using the market maker method is somehow more sensitive. You need to be highly particular and very much selective. If you are someone who loves to trade each and every hour, this method is not the right one for you. Right. So the first thing that I always do when I'm given any tradable asset is to start off the higher time frame. In this particular case, I have switched to the daily time frame, which is high enough for me to see the market bias, right? So after that, the next thing is to try and find the peak formations on this particular time frame. By peak formation, we are saying these are the reversal points that have been laid by the market. From this particular point, we can see that the market started to create an upward market structure. And still on that point, market structure is basically creation of higher highs, higher lows, or equal lows, equal highs in a ranging market. So by that is the basis of any trading system whereby we are trying to sell we are trying to buy the dips and sell the rallies like that. In this particular case, we can see from this point the market started to create the higher highs and higher lows, as we always know. Levels, as we call them in the institutional market maker method, is just an advanced way of terming higher highs and higher lows. In this particular case, we are now saying these levels will require to come in threes to complete what we call a market maker cycle. So that is the first or the foundation of everything that I use in my trading. So I've put this horizontal line to mark the lowest point I can see on this particular move to the upside. The next thing is now to check if I now have a peak, right? From this point, I can see that there was a rise, creation of a high, right? Breaking of that high, which we always talk about in market structure concepts, right? Breaking of that high will actually confirm that the market bias has changed. So I had breaking of highs twice at this point and at this point. If we have breaking of highs or lows twice, we would actually have more light that the cycle is almost at the end of or the market is almost reversing. At the end of the cycle, there are usually two things that occurs. It's either the market will chop or the market will issue a double top or double bottom in layman's terms. We also call that an M or W pattern depending on the market structure, right? So in this particular case, we had three impulses to the upside where we can say there was breaking of highs twice. Therefore, this particular point was valid to be called a reversal peak. So I had this peak. After three levels to the upside, we expect to see the market creating what we call a reset point, right? This was the reset point. And from that reset point, it's also a cycle restart. And this is where a lot of traders face a lot of much more difficulty. So we are saying from a reset point, we would expect to see another cycle, but no one mandates us to mark the exact levels, but at least the first cycle will give us the length that we may anticipate in the second cycle. Therefore, in this particular cycle, if we had this much length, we are also expecting to have that much length in the second cycle. Moreover, if we get a reset point, we are saying the market should break the high of the previous cycle, which occurred in this particular case. If I try to segment the levels in this particular cycle, a lot of people will see a lot of subjectivity. Actually, the system becomes subjective. So what would I do if I cannot clearly mark the levels in this particular context? I'll try to find patterns in support of the bias that I am looking for. In this case, we are looking for an upward bias from the reset going right up. The market then created another turning point. On this turning point, there was no clear pattern for us to term it a reversal point. But what we saw on the smaller time frames, there were peak locking, there were several characteristics that were issued, right? After that, we can see there was another reset, right? This was now a higher low in market structure concepts. So as you can see, we are creating higher highs, higher lows, higher highs, higher lows like that. What is the next anticipation for us to get another point to term a higher high? We need to break this particular point. However, the market did not break this point or this high. But what has it done? It actually went to the top and then came back to the bottom where we had our higher high. As long as we haven't broken structure or broken this level, we are still anticipating to see higher high, higher low, higher high, higher low, another higher high. Therefore, all this can be validated as a higher low to the upside like that. So if this is a higher low, it means we are correct to anticipate a higher high in this particular system, which is movement to the upside like that, so that we'll have break of this high and would call it a completed cycle. I hope this is actually making sense for you. All right, so basically this is how we try to mark the higher time frame. The higher time frame will give us this structure that we'll try to follow through when we go to the downward to the smaller time frames. So after these have been marked, this market structure is basically cycling up, and we are still expecting to see it cycle up like that. So what has happened in this particular case for us to say we are going to cycle up, or this is the end for us to look for long entries? We now need to incorporate the lower time frame. On the lower time frame, this is what we see. We've said levels are basically an advanced market structure system whereby we are just looking for breaking of lows, breaking of highs, and so forth. If we break a low twice, it means we are going to have a completed cycle. In this particular case, we can see that there was movement to the downside, breaking of that low, another movement, consolidation, but the low of that particular consolidation was this one, which was later broken. So we broke the lows twice, and after breaking the lows twice, we will be creating lower lows and lower highs. This is a lower high, lower low, lower high, lower low, and after these pairs or these impulses to the downside, we all know that at the end of the cycle, we either look for consolidation or a pattern in form of a W or in form of an M, right? So in this market context, we were expecting a W pattern. So how do I remove the confusion when I want to make an entry? I would try to use boxes to mark these levels. So in this case, this was going to be my level 1, and then this was going to be my level 2, and I love to mark these levels incorporating the consolidations and the pullbacks. This particular case, then the last level was this one, and the cycle was complete. 3 levels to the downside, and we are done. What next should I wait for? The next thing that I now need is to actually find the exact point of entry. If we look at my Instagram, I actually posted the trade that I recently took on Euro GBP, which is this one. It was actually a short trade to the downside, whereby we are looking to get a buy. Actually, we took a short, and after that short, we were now taking longs, which I'll post later on Instagram, right? So the next thing was now to find an entry. We had this as our neckline. From that neckline, I now need to see another cycle completing, but this cycle is now on the M15 time frame, right? On that M15 time frame, if we check, we can see that from the H4 neckline, we had drop, breaking of the low, drop, breaking of the low, and then we had the last one, the last level to the downside. Marking those levels, they would look like this, whereby we had drop, drop, and we entered short at this point to reach this particular point. After this point, this is where the market gave us candlestick reversal patterns for a long, and that long, where is it supposed to lead us? It's supposed to lead us to create the higher high on the daily time frame, right? I understand that this might be confusing, this might be difficult for someone to comprehend, and it may be necessary for you to take a deeper explanatory course for you to understand the whole system. With that being said, we are saying, as a trader, your job is to look for the pairs that are following this particular market maker context. If you try to incorporate other, or if you confine yourselves on a trade or a pair that is not presenting this particular template, you face a very difficult time. So the first thing that I always do is each and every day I try to look for pairs that are moving the way I expect. After looking for pairs the way I try to find these cycles, and incorporating all the cycles as I've shown you will actually give me a point of entry with higher probability. So in this particular case, I would say there is higher probability for us to see Euro GBP rising for days or for weeks or even for months. Let's see how it unfolds within the markets. On that note, we've come to the end of our today's video. I'll see you again. Have a blessed day.